As an advocate of all things fintech and wealth tech, our friends and partners over at Finovate wanted to share a quick message before we dive into today's conversation.
Greetings, WealthStack listeners. This is Greg Palmer coming to you with a special message about Finovate Fall, which is coming up in New York on September 9th through the 11th. As always, Finovate is your place to stay up to date on the latest technologies and innovations in finance. And new for this year, we have a special program just for those of you in the wealth management space. That Wealth Tech stream will take place on Wednesday the 11th, and it will feature sessions on how you can use new technologies to attract and retain customers, prepare for the generational wealth transfer that's already begun, make the most of new digital assets, and more. To find out more or to lock down your spot, check out finovatefall.com.
Welcome to the WealthStack podcast. I'm your host, Shannon Rosic, the director of WealthStack Content and Solutions. I'm joined by Patrick Shaddow, president and CEO of Syntax Data. And today's topic, well, why direct indexing is the future of investing. Patrick, thanks so much for coming on the podcast.
It's great to be here. Thank you for having me.
So before we dive into the meat of this conversation, I do want to start with your background. And I always joke that this is the toughest question you'll get this entire conversation, because to distill your history and background into, 2 minutes can be challenging. But tell me about what makes Patrick, Patrick, and how you landed in this world of indexation.
Yeah, absolutely. So what makes me me is the people that are around me. To be honest, I'm supported by a lovely wife. I have 3 great kids. I have a great financial backer. We have a great team of advisors, great staff here at Syntax Data. That's what makes me me, our people, right? And how I got into indexation, the world of indexation, I've been in the broader financial services industry since 2006, 2005. I was in a fintech company that was contributing 10b5-1 filings to the SEC and the DTCC and creating software to automatically do that. So that was my first taste into fintech. Before that, I was kind of in management information systems, creating databases when I was in college and, working my way through that. And in 2006, I was working at Dow Jones Indexes. 2007, I ended up kind of wanting to get out of Princeton, New Jersey, and into Manhattan. So, I started applying for jobs just like everyone else in the world, and landed a job at Standard & Poor's. I had a job from a hedge fund, and this was pre-2008, and then coincidentally enough, one of my clients who was my client when I was at Dow Jones, I ended up kind of going to work with them, where I was employee number 1 at that company, S Network Global Indexes. So started at the very, very bottom of the indexation world, where I was, a quarterly review analyst doing quarterly reviews and reconstitutions, and just kind of worked my way up through and to every single different job in the indexing business, from production analyst to corporate action analyst to development specialist to managing director of the firm to president of an indexing company. So that's kind of the journey of how I got here. We sold that company in 2020 to a company that now goes by the name of Vetify, and it was a great success for all of us and all parties that were involved. And now I'm here at Syntax Data, where we have kind of transformed our company from a little bit more than an indexing company.
So give listeners then the high-level crash course about Syntax Data and the benefits of combining an index company, technology company, and ultimately a data company.
Yeah. Well, we say it all the time, and it's truly unique and it's truly special. And the direct to index world is a technology business, right? And the way with which we kind of thought about our company was guided by the data that we have been sitting on. And so when the team here who courted me over here to become the president and ultimately the CEO of the company showed me the data that Syntax Data has, it changed the way I fundamentally went about my business, where historically I used to shut down my development program for 16 weeks a year in order to maintain all of the indexes that I currently had in production. Because when I started here as a quarterly review analyst, right, you have to systematically go through the same rules quarter in, quarter out to reproduce this index quarter in, quarter out. And so when I started seeing this data, the data that we're sitting on, again, it fundamentally changed the way I do my business, because the way with which we store it and aggregate it is essentially systematized, where we go company by company, product line by product line, and tag each individual company at the product line level with a standardized tag. And what we ultimately do then is standardize relative to one another what every single company in the world does. And so then with instantaneously, we can identify with pinpoint precision not only what any one company does, but to the level that they do it in terms of percent revenue derived, as well as nominal dollar amount of revenue derived. And then we use that data to populate starting universes, which are a list of eligible holdings and companies that are eligible for inclusion in this particular index, right? And so when I started kind of seeing the whole dynamic of okay, now I got this indexing company over here and I got this data over here. Now let's go out and acquire a software technology company to automate the whole thing. So that's the true power of combining an indexing company, a data company, and a technology company.
Well, that's incredibly fascinating, and I appreciate you indulging me because that was a loaded question. But I do want to dive into our first segment that I call Stats All Folks. And so let's really set the stage here, particularly when it comes to direct indexing and personalized portfolios and why this trend has gained so much traction. Found some fascinating stats to help paint this picture. Came across, according to UBS Global Data Wealth Book from 2023, wealth per adult is set to reach over 110,000 come 2027. And the number of millionaires is set to reach around 86 million. Would love to be part of that number. We'll see. And while the number of ultra high net worth individuals is likely to rise to over 372,000. Obviously, there's a case to be made here for custom portfolios at scale. Make it for me.
Yeah, well, I think it's a fairly simple story, right? And the story kind of goes like this. All those numbers that you just kind of mentioned are the consequence of the democratization of investment management, starting with the formation of the 40 Act fund in the 1920s, right? And then after everyone got back from the war in the 50s, people started buying mutual funds, right? Mutual funds. And so now all these people have access to financial markets where they didn't used to, right? Democratization, number one, giving access to platforms that people didn't historically have, right? So in the 50s, people get back from the war, they start buying all these mutual funds. Mutual funds start going up in value. 60s, because everyone's buying these securities, the back office crisis of Wall Street occurred, where essentially there was that was the first time that technology was introduced into finance, other than the ticker tape, right? And it used to take weeks to clear a trade. So then in the 70s, you get the first money market mutual fund. 80s, you get this guy who came on the scene. His name is Mike Bloomberg. He started kind of talking about interest rates and treasury prices. Treasury prices at that time were going into the 80s, into the 20%. Another guy came on the scene by the name of Charlie Schwab, who democratized access to financial markets through a discount brokerage platform. 90s, you got the ETFs. 2000s, high frequency trading. 2010s, you got these great things called omnibus custody accounts, which allow for fractional shared capabilities. 2020s, now you get this whole financial technological innovation where you can get all the benefits of indexation through technology platforms. Now, that whole thing, right, caused a huge amount of wealth concentrated in one particular generation, right? And now this one particular generation is set to transfer their wealth to all their heirs and their children. And so instead of having a financial advisor, a normal financial advisor, instead of having one client with multiple millions of dollars, is now going to have, 3 or 4 clients with a few $100,000 each. And those clients that they're going to have are a totally different demographic than the original wealth owner, right? So what you're seeing now is a fractionalization of the financial advisor's business practice. Again, used to be one client with multiple millions. Now it's multiple clients with a few 100,000, right? So they're going to have to work just as hard, if not harder, to maintain those 3 relationships or 4 relationships than they did historically with the original wealth owner. And these 4 people over here are completely different. I don't know about you, but I have 3 older siblings, and the 4 of us are not all alike, right? And so each one of us have different investment objectives, and we have different values-based investments as well. And so what we believe is that, with this new financial consumer is what we call them, that, these are the types of individuals that grew up on technology, that grew up used to instant knowledge and satisfaction of their curiosity, right? We all have tools like AI where we can check things out and learn for ourselves. And the long story short, Shannon, the case for customized portfolios is that the changing demographic is changing. The need for the financial advisor to differentiate himself from his competitors and the folks that are around him will ultimately lead to customization of investment management. It's happened everywhere else. Why hasn't it happened in finance yet? Well, it hasn't happened in finance yet because the technology was not there yet, but it is here today.
And to that point, I want to talk a little bit more about direct indexing then specifically because, like you said, the adoption and understanding has really lagged because the tools were just not readily available to advisors, or they weren't that intuitive to use. And that's clearly starting to change. And from a business point of view, this really just seems inevitable. The typical advisor today doesn't offer much in the way of differentiation when it comes to portfolio construction. If I'm a prospect and you can construct me a portfolio using, say iShares, what is the value in that? Where's the stickiness? I can easily go across the street to your competitor and essentially get the same portfolio. So would you say we're finally at a tipping point now with direct indexing and the technology behind it?
I think so. I mean, we're either a little too early, right? But we're certainly not late, right? But look, ETFs aren't going anywhere. They've done a great job of opening access at low minimums for the typical people, right? But as financial advisors see a majority of their clients leaving because of this transfer, right? What is ultimately going to happen is the competitive landscape is going to change, right? And so why not offer a technology platform, a simple, intuitive, easy to use platform, which can help with the stickiness of your business, right? And so, what's the difference between an iShares model and an Invesco model, right? There's not much, right? Or a State Stream model, right? Everyone has large cap US, mid cap US, small cap US, emerging markets, international developed markets. You put in your fixed income component, right? It's everyone has it, right? You throw in some tilts, but there's not a whole lot of platforms out there which offer true hyper personalized portfolio creation specific to the individual, right? And so now that individual has their very own index, right? And so and the financial advisor is going to be able to offer that, and their financial advisor down the street might not necessarily be able to.
Because another stat I came across that I thought was interesting was around the direct indexing growth we're projected to see, which is Cerulli's claiming 12.3% annually, reaching a total asset value of around 825 billion by the close of 2026. So there's clearly an opportunity for financial advisors and the future of their businesses if they get this right.
Absolutely, and I would say that that's a little conservative, that growth rate, right? There's not many times where there's something that comes in and changes the form of an entity that's providing a function. We at Syntax have this whole thing where we're systems based, right? In every system, there is a location, there's a function, and a form, right? And so when you have something coming down here at the form level, which is changing, right? Changing the form of the entity providing the function, what you change is scale, right? Think about storing information using books versus storing information using technology, right? If you store information using technology, what you started with the floppy disk, you started with books, then you get to the floppy disk, then you get to the zip drive, right? And now all of a sudden you got the Google, you got the cloud, right? And so now you can rapidly transfer. And so what happened is the changing of the form of the entity providing the function. And what we're doing at Syntax is changing the form of the entity providing the function, which is investment management, by offering and empowering financial advisors with the front, middle, and back office infrastructure, which is typically reserved for the world's largest asset managers. And they will have this power at their fingertips to produce rules-based and transparent portfolios that are sticky to their client.
So let's talk about the platform itself then. Walk us through the process of how an advisor would create their own custom indices with Syntax, and what's ultimately the benefit for advisors to create their own indices.
Sure. So I started this whole thing saying I've been in the indexing business forever. And so when you're in the indexing business forever, you come across a lot of different clients. And just like we do at Syntax, we systematized indexing, where we essentially created a framework and a questionnaire that would help me historically price out how much I'm going to charge for this index, right? Is it US? Is it international? Is it all country? How often does it reconstitute? Is there a factor tilt? Do we want to eliminate a sector, overweight a sector? What do you want to do with your dividends? Do you want to put a value or a values-based impact investment on this thing? And so what we essentially did is we standardized the questions, right? Simply. Just the same exact way Intuit TurboTax standardized a very complex tax code using a series of question and answers, and the answers are multiple choice, right? And so what we aim to do is to create the turbo taxification of indexation, right? And so the process of a financial advisor going through this platform is very simple. In a matter of moments, in a few minutes or less, they can either walk through the questionnaire with their clients, or they could design the product absent their client and then present it to their client. And if their client doesn't like it, then they can go back and edit it in real time by changing certain particular features, right? Now, in terms of the benefits, this is one that's really great. So typically, each one of these models come with what are called expense ratios, right? And what we in the business call acquired fund fees. So when you replicate that model with the underlying holdings, right, what you're eliminating is that expense ratio and those acquired fund fees. And so the client is no longer paying these acquired fund fees, which means they are probably net around 60 basis points up a year, depending upon what types of products that they're investing in, right? So now 60 basis points a year compounding over a period of time is a lot, right? And so client retains more money in their custodied account. Financial advisor advises more assets under advisement because their clients keep more. The RIA, who offers the platform, keeps more assets under management, right? And the list kind of goes on in terms of all the benefits, right? And the main benefit is what I've been seeking to do, what Syntax has been seeking to do, is to promote the generational wealth, to keep it in the family, to keep it in the homes around our 50 states, right? And so our platform has been designed to bring the intellectual property that is created by index providers and licensed to financial product issuers one step closer to the American home.
Well, when I had a demo of the platform, I was absolutely blown away by it all, because it was just so intuitive. And for somebody who isn't necessarily entrenched in this on the day to day, I was just so impressed by not only the questions you asked, the options that were, available to choose from. So I have to ask then, what has the reception been from advisors and their clients? They must be loving this.
Yeah, and the way that we're pricing it makes it easy too. Pricing is always a big story too, but everyone we've shown it to, everyone signs up, and that's what the really great part is, Shannon. And I think we're going to be able to accomplish what our overall goal is, right? And that goal being keeping more money in American homes, right? And promoting that generational wealth. Because if it doesn't go down, it's going up and out, right? And when you start thinking about those questions, and simple and intuitive to use, we've been in this business for over 20 years, right? And the partners that I work with, the people that are advising us, the technology, we have spent so much brain power and thought on making it simple and intuitive and easy to use. The UX experience is everything.
Yes, it is. And so, when it comes to complex topics like ESG and direct indexing, and as investors get savvier around these topics, how does your platform help advisors and clients navigate those challenges?
Sure. So when you log into Syntax Direct, you're immediately sent to a landing page which shows you 7 different options. Option number 1 is where you can modify an existing benchmark. Option number 2 is where you can replicate an existing benchmark, but with a reduced component count, and still do your modifications. Number 3 is factors. 4 is impact. 5 is macro themes. 6 is micro themes. And then lastly, there's off-the-shelf indices. Now, when you start thinking about navigating through towards environmental, social, governance, composite ESG, sustainable development goals, controversial industries, there's different ways with which any one financial advisor can create a portfolio for their clients, and there's different ways that we've gone about it historically to put together, best in class ESG portfolios. So number 1 is you can do a best in class approach where you select the companies that are recognized for their superior environmental, social, governance, or composite ESG characteristics, while still maintaining sector exposure in line with the broad market. Or 2, you can eliminate controversial industries like civilian firearms manufacturers, or fossil fuel companies that are engaged in fossil fuel extraction, or coal power generation, or whatever, prison operators, tobacco, firearms, you name it, right? And so what our platform aims to do is use our underlying data set, which we have systematically gone through that painstaking process of standard, all that stuff, and use all that information to just create portfolios that are, again, pinpoint precise with respect to their investment objective.
And Syntax has already seen just an incredible amount of success already. I mean, at T3 this year, you guys won the Emerging Technology Award, and I'm sure we'll be seeing you guys on stage more throughout this year and next. So I have to ask, what's on the roadmap for you guys?
Oh, well, a lot of great stuff. We have been licensing our data to some of the most, foremost preeminent financial participants in the world. Where we have redistribution agreements with these firms that are using our data to create more precise rules-based portfolios, using our data to support reference data, using our classification efforts to better identify, the underlying exposure in a private private equity holding in portfolio. So be on the lookout for a lot of announcements about, us licensing our data to these really big firms. And then also on the direct to index side, and you notice that I say it's direct to index instead of direct indexing, right? And that's purposeful, right? Because we do believe we're going direct to the index, and we do believe that financial technological innovation has afforded us now the opportunity to get all of the benefits of indexation without needing to buy it through a wrapped product, right? So we have begun redistribution, market platform agreements with some of the largest turnkey asset management platforms here in the United States, where we're constantly working on promoting that. We are white labeling our platform for other folks to go out and use and to sell, and for financial advisors and wealth management offices as well. So be on the lookout for that type of stuff as well. And then our traditional indexing business that continues to grow and gain assets, and we continue to license and support all of our clients in the financial product issuer space, right? Because we believe that there's room for both.
All right. So you're on the rocket ship right now. I get it.
We're
A lot
trying.
happening.
We're trying.
Love it. Well, Patrick, it's actually time for segment 2 of this episode that I call Ask Us Anything, where I've gone out to the social universe and asked them to submit questions they want answered by you. And we certainly had a few folks slide into the DMs this week. So putting you in the hot seat. You ready for it?
All right, bring them.
All right. First question we got is, what drives the affinity portfolio analysis?
Ooh, so that's a great one. The affinity portfolio analysis is driven by our underlying functional information system, where again we've gone through that process to standardize what every company in the world does. And so, I kind of got into it a little bit before, talking about changing the form of the entity providing the function, but I kind of skipped over the overarching kind of theory, right? And so, our functional information system, akin to geospatial information system, is a coordinate based system, which essentially has resources and business activities as the main way to kind of look at what companies do, right? And then when you start kind of looking at what is a resource and what is a business activity, well, a resource is a noun and an activity is a verb, right? And hence our name syntax, the structure of a sentence, but the structure of the economy, right? And so now what we start looking at is, have you ever been anywhere in the world that hasn't had people, places, things, energy, information, or money?
Can't say I
Those
have.
those are pretty much the 6 primary resources that existed in every single civilized economy dating back to ancient Sumeria. And then what our team, and this took over 20 years to build and being covered by over 23 patents. Then our team gone through the process of doing all the activities as well. So procure, first you got to find something, produce, then you got to make something, exchange, then you got to sell it. And then lastly, you got to manage that relationship. You got to manage it. So now you start thinking again about that Google Cloud example, storing information using real estate, that gets you either a server farm or a library. But if you store information using technology, now you got the cloud, right? And so what powers the underlying affinity portfolio analysis is this systematized way of looking at the economy through a code-based, coordinate-based information system. And you can more or less tell the economic footprint of any geographic region in the world through our system. And you can also tell exactly what is hidden in a portfolio by using our system.
Amazing. Appreciate that context.
Sure.
The other question we got, and this may not be in the realm of your particular expertise because this is a big one, but in the context of climate change, what are the 9 planetary boundaries?
Yeah, that's actually a recent research report our team put out. It has a little bit to do with climate change and biodiversity loss, right? But I'd kind of direct you to go to our website, Syntax Data, go to the research side. We have a 9-page paper on it. But long story short, it's all about the 9 main things that we as humans can do in order to prevent and protect our Earth, right? And biodiversity is the part of nature that has to do with the living, right? And so nature encompasses all. And yes, we want to protect everything in nature, but we also want to have particular action towards those things that are living, in terms of the foliage and obviously the biodiversity loss in terms of ripping up fields and mining, so on and so forth. So give it a read and give us some questions after that.
Love it. All right. And last question we got. What's up with Texas? And for those that maybe don't know, Texas is looking to launch a stock market by 2026, which could be a game changer for investors in the Dallas economy. What are your thoughts here?
Yeah, America has been has been supported by a free market and a free economy from sea to shining sea. And when you start thinking about stock markets, right, it's easy to get lost in the Standard & Poor's 500 or the Dow Jones Industrial Average or the MSCI World Index or EFA or International Developed Markets, right? And then you start thinking about the stock market in terms of just a stock market. But no one ever thinks about it as a market of individual stocks, a market of individual companies, each company providing their own role and function in our economy. Now, in terms of what's happened down in Texas, exchanges, offer exposure and capital to these companies to grow, to continue, driving innovation and technological improvement and promoting, the economies around them. They're the 9th largest economy in the world in and of themselves. If there's one place that I think should have a stock exchange, why wouldn't it be Texas, right? It's a market of stocks, and we would like to provide liquidity for these companies.
Well, I appreciate you being put on the spot and your insightful answers. And I mean, is California going to go this direction too then? Since they'd be the 5th largest?
You never know. I mean, look, at the end of the day, you got to think about the liquidity and the volume of companies, right? And what's really crazy about these listings is that, a majority of the trading doesn't take place on the stock exchanges, right? I mean, a majority of the trading takes place in these pools, right? I mean, you can look it up, and they're called dark pools. And when I used to create indexes, and when what our team does now is we use composite pricing, and we use composite volume as opposed to security market specific volume, because the volume of shares that trade on the New York Stock Exchange for one company is different than the amount of shares that trade for that particular company in the aggregate, right? And so when you're putting together these portfolios, it's important to look at liquidity. So regardless of wherever the venue is, right, it's all about just providing a mechanism to buy and sell the underlying securities that these firms are offering to the public.
Great. Appreciate that perspective. But Patrick, we have come to our final and what might be my favorite segment of the podcast, Stack It or Whack It. So indulge me here, play along. I'm going to throw out a few technologies. Be warned, they're not always necessarily wealth tech related. Sometimes they're just random thoughts, especially if I know you. And you tell me if they are essentially worth the hype or not. So, stack it, use it, love it, or whack it, lose it, hate it. So first one I have to ask you about. AI solutions for picking stocks, stack or whack, kind of in their current state.
I'd whack that one. With picking certain stocks, and I might be a little biased, but with picking certain stocks, what that does is AI, I think, could skip the first 80% of the research. I think AI will get you 80% there, right? But there's still a whole lot of information that's stacked up in that 20%, right? So, I'd whack that. AI for part of a vertical process, totally, but not in terms of a horizontal, just, so no.
Fair. All right. Number 2, cloud computing. I have a feeling I know which direction you may go with this, but I'll let you say it.
What about it? Oh, yeah. Well, yes. I mean, totally. Stack it. We use drives for everything. We use, all of our various tech platforms that we use, absolutely, to be able to communicate with a distributed workforce instantaneously through and share information through our cloud. I mean, you got to protect it, but yes, totally.
Love it. Well, Patrick, it's been an absolute pleasure getting to know you and more about syntax data. So thank you for all of your insights today. And please feel free to tell listeners where they can find out more about you and what you're working on.
Absolutely. www.syntaxdata.com. You can find us right there.
Love it. And I'm sure we'll see you out on the conference circuit soon.
Thank you, Shannon.
Awesome. And be sure to like and subscribe to the WealthStack podcast on all major podcasting platforms and follow all things WealthStack on wealthmanagement.com, LinkedIn, and Twitter. And if you want the in-person WealthStack experience, join me June 9th through 12th, 2025 at the beautiful Boca Raton Resort for Wealth Management Edge. Thank you all for tuning in.